I wanted to get to the markets a little bit and show you why I wanted to make this video right now. It isn't just what's happening with gold, it's what's happening in the general market. Everything has been plugging along now for a couple of years. We've had this, since back in 2009, the markets have just been charging upward and upward and upward. This is the Dow Jones Industrial Average. And what I've drawn here is this wedge pattern that it's been rising in, and how dramatic that is compared to the last bull markets. This is a lot more tight and complex. This is also happening on the volume is descending, where before that, the volume was always increasing. Whether the market was going up or down, the volume was increasing. This market here is not a healthy market. This means that less and less of the public, the real investors, are in there, and more of this is basically black box trading where it's programs. The problem with that is when the markets change, every black box is going to try and be selling at once. So what is being set up here is probably the biggest market crash in history coming. Now this is the Dow Jones Industrials. That's just 30 stocks. So let's take a look at the S&P 500. This is the 500 largest stocks in America. You see the same pattern here where it busted through its previous resistance. You've got this thin little channel with very low volatility where it's rising and rising and rising, and it just looks very, very manipulated, that it's such a straight rising channel with such low volatility as far as the ups and downs. And then again, you've got this descending volume where before it was always a rising volume whether the market was going up or down. So we've got a divergence here, rising market, descending volume, and the targets, if this crashes, we're talking about going from 2,000 to under 600. So like the 500 area target, that's a pretty dramatic crash. Back up to the Dow for a second, we're talking about 17,000 to down below 6,000. Again, a very, very dramatic crash. But let's take a look at an even broader swath of the market. This is the Wilshire 5000 composite index. So here we're tracking 5,000 stocks. So this is really a picture of the stock market at this point. And you see basically the same pattern, but it's even more dramatic. This rise here is even bigger past its previous highs and can't possibly be sustained in the long run. We have a recession somewhere between every 5 and 9 years. There's, the economy will go up and then there's a big pullback. Well, the last recession was a worldwide global financial collapse, basically. It was a tremendous crash. This is all during manipulation. This is also during zero interest rates. That has never happened before. In these previous tops, they raised interest rates just before the top happened and they popped the bubble. We're still on zero interest rates. They don't have any ammunition if this starts to collapse or crash. They can't really pump up the market and encourage banks to start lending again if they're already at zero interest rates and they've been printing more than $3 trillion extra dollars. What can they do the next time around if it took $3 trillion in zero interest rates for this whole time to get this to do this? Once that breaks, we're going to see pretty much a different world, I think. I wanted to get to the gold price here. So this is the entire bull market from 2001.